Do you find yourself going into April 15th, crossing your fingers for a tax miracle, wishing, hoping, thinking, boy, I hope this year it'll be different, or maybe getting your taxes back and wishing you would have done something differently? Today, we're going to talk about the 5 year-end planning and tax strategy categories that I walk through with all of my clients, and stick around to the end for a key tax planning tip. I'm Scott with Searns Financial Group, where we help people answer their key questions. Are you on track for retirement? What can you do to help improve your financial picture? And how can you help reduce your tax situation? Do you ever feel like this when it comes to planning and taxes? That you're driving forward, but stuck constantly looking in the rearview mirror? I see this a lot. Time keeps moving forward, but each and every year when April 15th comes, you're looking at a report that's telling you what happened in the past. And unfortunately, sometimes missed strategies and missed opportunities because of not focusing forward. Now, there are a lot of great tax preparers out there, but their duty is to provide you a report on the past. So today, we're going to talk about ripping off that rearview mirror in 5 tax planning strategies with a forward focus. Our first category are retirement planning strategies. Have you thought about making contributions to retirement accounts that could potentially be available to you, whether that's a 401k, 403b, 457, a Roth 401k, an IRA or Roth IRA, or maybe making a contribution to a spousal IRA? For those that are independent contractors or small business owners, maybe a SEP IRA, simple IRA, or a solo 401k. Also, there's different strategies that you could potentially look at, like a Roth conversion or the backdoor Roth strategy. Another thing to think about is should you be optimizing your contributions? Maybe you're making contributions to a 401k when you should be going into the Roth 401k, or vice versa. The other account to look at is, could you make contributions to a health savings account? Now, contributing to some of these accounts will help you reduce taxes today, while others could help provide you tax-free growth and tax-free withdrawals in the future. And then some just allow you to put extra money away in a tax-advantaged way. Our second category are charitable planning strategies. Are you charitable but no longer able to itemize your deductions because of the standard deduction? Well, there are potential strategies that might be available to you to help you get the best of both worlds. Some of these strategies include bunching, qualified charitable distributions, donor-advised funds, or donating appreciated assets. Our third category is investment planning strategies, taking a look at tax loss harvesting, tax gain harvesting, and then tax-efficient investment placement, meaning are your investments currently adding to your taxable income? If so, something that you want to take a look at is putting the right types of investments in the right account types. I hope you're finding this video to be of value, and if you'd like to see other videos just like this to help you build wealth and reduce your overall tax picture, subscribe to our YouTube channel. That way you'll get notified as we continuously come out with additional videos to help you and your overall financial future. The fourth category is education planning strategies. Some thoughts here are, could you be making tuition payments? Or should you be funding 529 plans or Coverdell accounts? Our fifth category is legacy planning strategies. Let's face it, you're probably not going to spend your last dollar on your last day. Or maybe like some of my clients, it's important for you to pass on wealth for generations and generations. Now, those IRAs, 401ks, 457s, 403bs, those do not get passed on tax-free. So in either case, there are a couple of approaches that you could take. One is that you let your children or beneficiaries, let them deal with the tax problem. Or two is you could put potential tax planning strategies in place and work to help deliver more wealth to future generations by keeping more in your pocket versus giving it to the IRS. Also, for those that are married couples, have you thought about what's going to happen if one spouse passes? What is the likelihood of the remaining spouse jumping up one tax bracket, meaning their taxes going up, if one person were to pass away. Okay, here's the key tip. In our firm, we don't wait until tax season or until April 15th. We're constantly working on these with a final wrap-up before the end of each year. Different strategies have different deadlines, and for some, the deadline might be December 31st. Are you thinking about starting in the category of retirement planning strategies? Well, I've created a video on 401ks versus Roth 401ks and which may be better to contribute to. I've included a link in this video as well as in the notes below. With proper planning, there can be a lot of opportunities, strategies that can help you reduce your taxes today, strategies that could help provide tax-free growth and tax-free withdrawals in your future, and then strategies that could help you pass on wealth for generations and generations while keeping the most in your family's pocket that you possibly can. Wondering how to rip off that rearview mirror and create a tax planning strategy that could be right for you or for your family? Utilize our website to set up a complimentary call. Let's talk one-on-one and start narrowing down that list to what could be a right fit for you. Don't forget, if you found this video to be of value and benefit and you'd like to see other videos just like this to help you build wealth and reduce your overall tax picture, then subscribe to our YouTube channel so that way you get notified as we continue to come out with additional videos to help you in your financial future. Thanks, and have a great day.